women as a demographic aren't getting their fair share of credit, of servicing from their banks. We know that they're going to make a huge impact on their communities when they're given the same opportunities.
Welcome to StaffBuffalo's Pain Points podcast.
Welcome to the latest Pain Points podcast. Right now we have Lauren Schellinger from Impressia Bank. Thank you so much for doing this with us today. You have us in this beautiful new facility right in the electrical tower downtown. It is absolutely gorgeous. So this is your headquarters, correct?
Yes, this is our brand new headquarters. We moved in December and we have our grand opening this month.
Oh, that is, congratulations. That is phenomenal and such a beautiful space. So can you tell me a little bit about what actually sets Impressia Bank apart from other banks?
Thanks. So we're a new bank and we are focused on women-owned businesses, female entrepreneurs, trying to find a way to support the women in our community because we know that women as a demographic aren't getting their fair share of credit, aren't getting their fair share of servicing from their banks, and we know that they're going to make a huge impact on their communities when they're given the same opportunities.
I love that. Well, it's such a great organization that you have here. And so how did you get from growing up to where you are now at Impressia?
Thank you. So I've been in banking for a long time. I actually started in banking out of my undergrad degree, which my undergrad degree was in a totally unrelated field. I was studying neuroscience and philosophy.
Oh, wow.
But as I looked at paths forward, I interviewed with a lot of different companies and I interviewed with a bank, and I had never really thought about banking as a career. And banking was to me sort of a commodity, just a thing that you needed to have in your community. And speaking with the recruiter about lending and about the benefits that it has on shaping a community and how lack of banks can mean a lack of economic development, it really felt like a worthwhile thing to look into. So I actually joined a bank locally here and participated in their management development program, which rotated me through a couple of different areas of their commercial bank. And I loved that organization. Found that I really loved banking and being close to the customer and trying to deploy capital to help grow businesses, create new employment opportunities. And I did that for a number of years, 18 years with that institution.
Yeah, wow.
And I got to do a bunch of different things. I eventually grew into a role that was more focused on sort of the Northeast region and sort of complex international transactions, which was challenging and interesting, but I missed having that opportunity to be close to the customer, to see and feel what they were building, what they were doing in the community.
Yeah.
And I also found that the transactions that I was doing, they didn't reflect me and my community. And so the opportunity to join Impressia arose, and I really jumped at the chance to help women start businesses. We find that women who are starting businesses are hiring more, paying fair wages, are reinvesting back in their community, whether through donations to nonprofits or just through the work that they're doing and finding partnerships, opportunities to collaborate instead of compete. So for all of those reasons, I sort of made that switch from a more traditional bank to this bank that's really focused on a specific demographic and a specific mission.
That's awesome. So basically your job almost became too transactional and you wanted to say like, well, how do I actually help people again? And then you have a wonderful opportunity to do so. So can you tell me a little bit about if I'm just a normal consumer, not someone who has a business, do you also service just individuals?
Yes, absolutely. And in fact, we're really trying to be the bank for all the women in our community.
That's phenomenal.
And we found I should share that our steering committee was formed a couple of years ago. C&B Bank is our parent company, and they started a steering committee to try and look at if we wanted to meet the needs of women, what are they looking for?
Yeah.
And through that effort and research, we found that the thing that's missing is that personal touch. I think you might not remember, but when I was young, I feel like we knew who our banker was. My parents were not high flying, but they had a banker. They had a person that they'd go into the branch and they knew each other well, they knew their whole history. And a lot of banks have had to move away from that. They just can't staff to meet those needs.
Yeah.
So there are very few people who have that sort of personal relationship with their banker. And women, I think, even more so than men, miss that piece of it because financial conversations really require a certain level of vulnerability.
Yeah.
And if you don't have a personal relationship with your banker, I think women especially are less open to having that vulnerable conversation unless they feel that they can relate to the person on a personal level.
That makes sense, especially, and then back to business owners, especially starting a business takes so much risk and so much confidence in yourself that you don't always have every single thing that you need in order to start a business. Maybe you need additional financial acumen. So then how do you help maybe someone who's brand new, has an idea, ready to start, maybe even has a product already? Like, how do you help that entrepreneur really fund their business?
Yeah, absolutely. So you said a couple of interesting things. I think one of the things that really sets apart somebody who can be successful is the person who can say, I don't know. And being able to have that vulnerability, especially when you're looking for financing to start a business, that's a scary prospect, right? A lot of people think that if they're going to a bank to ask for money, they have to pretend like they know every possible outcome and all the risks. But really the banker's job is to help educate them, help ask questions, and they expect that sometimes the answer will be, I don't know. So I think that's part of what we do. A lot of my job is having those early conversations to say, okay, you have a brand new product and you're just starting, or you've been successful in selling out of your home or at a smaller scale and you're looking to invest and grow. I want to ask those questions, and they should be questions where we're both open and transparent, and there should be a lot of I don't know, or it could be this and it could be that.
Or that's a good question, I hadn't thought of it yet.
Exactly.
Yeah.
Yeah.
And then you help truly shape the financial acumen of that business owner to really help guide them too. Well, are you looking to hire? Do you need more product? Do you need more raw materials? Because if you don't know that, then you don't know how to help fund them, correct?
Exactly, yeah. So often it's a conversation about, well, what are your payment terms with your vendors? What are your payment terms with the customers? And a lot of times they sort of happen into payment terms, right? And just having a conversation about, oh, if you change this or that, or even open a conversation about that, the financial picture of your business and of you personally can change dramatically.
That's amazing. Do you have that? Have you helped any of your clients through maybe those times where they had 45-day terms and you were like, well, if you maybe tighten it up a little bit, then your cash flow would be a little bit better?
Yeah. So if you don't mind me sharing a story, I do have one client who I had worked with. She came to us and she had been financing her business, although it was incredibly successful and very profitable on paper. She'd been growing revenue very steadily, hiring a lot of contractors to do work for her, and she had been financing the business with personal credit cards just because of the growth. And she came to me saying, I need funding because I'm spending so much on just interest payments to keep my business afloat. Meanwhile, I'm working with my accountant and it looks like I'm making plenty of money, but I don't have this cash in my bank account. So we went through an expense audit. That's usually a first step. And then the second step is really talking about what are the payment terms. And we found she was coming out of pocket as a business for a bunch of upfront expenses and offering 90-day, 120-day terms.
Wow.
Because her clients were large Fortune 500 companies.
So they are dictating the terms.
Exactly.
Yes, they always do the longer terms, for
Right.
sure.
Yeah.
It's enraging.
And she had never pushed back on that because she said, I'm so lucky to have this company as a client, right? That's the perspective she was coming from. But after our conversation, we really found this is not sustainable, right? You can't continue to grow without having these
chopping off your legs.
Exactly. And so she found happily that when she approached these businesses to say, hey, what if we talked about different terms? A lot of them had plenty of other options for her. Some of them did require she had to take a credit card, which has its own downsides.
Yep.
But she was able to get funding so much more quickly because they valued her service.
That. So
Right.
she proved herself to her clients. So then by the time she went back and negotiated the terms, then she could get them.
Exactly.
I love that.
Yeah,
That's a
so
great story.
it was really nice. We did end up also being able to offer some financing, but so between those two things, she was able to get through, and now she's in a much healthier place, and actually she just bought a new house, so it's really exciting.
Good for her.
Yeah.
So then the professional went back to the personal, and it's full cycle.
Yes, and I love that I get to be a part of both sides of that.
Yeah.
I think it's rare for a bank to have a single individual who's doing both the commercial financing as well as sort of the personal residential lending.
Oh, that's wonderful. So
Yeah.
you do offer so many different services too, that you can be everything that the women need, so that when they come to you, they can truly entrust, hey, this is what's going on here. Maybe they're thinking about selling their business.
Right.
Like, what advice would you have for someone that's like, oh, I don't know, maybe in the next few years I might want to sell? What would you even tell someone like that?
So that's a conversation we have a lot. There is a lot of business turnover right now. A lot of companies are looking, we have sort of a problem in this region specifically, and then as a nation, that there aren't new generations coming in who want to be as entrepreneurial.
Mm-hmm.
So a lot of businesses are looking to sell because they don't have somebody to take over that's within the family or within their employee circle. And as we have those conversations, we have a couple of business brokers that we work with. Business brokers, as you know, are typically like geographically specific.
Yeah.
So you really need to know that local market.
You do.
Yes. But we'll connect people, and we typically recommend connecting 5 years ahead.
Yeah.
If you can't do 5, 3 years is better.
Mm-hmm.
There are companies who say, I want to call it quits, I'm ready to retire. I'm either going to sell this business or I'm going to close it down. And they have like a 1-year time horizon. And that's a tough spot to be in, because while it can be done, you're often leaving a lot of money on the table.
Because you weren't well prepared.
Exactly.
So really, even just thinking about any type of offloading of your business, whether you're selling it to your employees, whether you're selling it to another organization, you really just need to get all of your ducks in a row,
Right.
nice and early, and have a game plan and be able to talk to someone that you truly trust
Yes.
in the end.
And it's a very different strategy, right? For years, you might be trying to minimize profits so that you're minimizing tax obligations.
Ah.
Whereas when you're preparing to sell a business, you want that bottom line to look super strong.
Mm-hmm.
And although you can explain away some things through adjustments to show, oh, actually the profitability is this, it looks so much better if you have planned, if you can show those couple of years where you were really maximizing those profits.
Now, do you have any just generic advice for maximizing profits during that time? Do people have any like little tips and tricks for when they are gearing up for that? Just generic?
So I would probably, if I had a client in front of me, I would give some generic advice, but I would also refer them to a business broker.
Oh, yeah.
I think that's one of the best pieces of advice, because a lot of companies think, oh, my company's too small, I can't afford to work with a broker, I don't want to pay that fee. But they have the detailed advice that really can make a huge difference.
Wow.
Generally speaking, what you want to do is try and ramp up your sales as much as you can to show that impressive top line. And sometimes you do that by tweaking payment terms.
Interesting. So as long as you have the real true strategy behind it, then you can truly pre-plan out.
Right.
Ah, I like that. So then what about if an organization finds themselves in a tough financial moment, if you will? So maybe the cash isn't coming in, maybe it was just like a bump in maybe a client not paying or something like that, where they're just kind of feeling a lot of stress. What is the first thing that you recommend? Besides calling you, of course.
Of course. Well, hopefully, if they aren't already working with Impressia, hopefully they have a bank with whom they trust and hopefully they have a relationship with a bank with whom they have a personal relationship, somebody that they can come to and confide that there's been a problem. Either they lost a big client or a downturn, or lost a key employee who's now gone to a competitor. So hopefully my recommendation would be that they have somebody they can go to and be transparent and share that problem cards on the table.
That's great.
Because a good banker, even if there's already credit extended that might now need to be refinanced or restructured as a result of this change, most banks are not going to say, I'm calling that loan now that you've told me there's a problem. That's in nobody's best interest. And laying that out, being candid about this is the problem, this is what I want to finance for, helps the conversation go much more smoothly and helps usually get to a financing solution much more quickly.
So transparency is key.
Absolutely.
Yes, because then if you're not being vulnerable, which you mentioned earlier, then they can't help you by finding the solution. So
Right.
it's just easiest to just promptly right away and consistently be in touch with your banker.
Yes, absolutely.
Yes.
You want somebody who knows your business and who knows, oh, if you say I lost XYZ client, your banker should know what that means for you.
Oh, wow, yeah.
Right? You want somebody, not that your banker will know every one of your clients, but if
But
you...
the big ones,
Right,
yeah, that makes
exactly.
sense, especially if you're relying on that. If you're building your business on that, then they will know that because they're going to be checking in on you if you need anything.
Right.
That's wonderful. So what type of financing options typically are available for entrepreneurial women who are trying to grow their business?
So there's a myriad of different solutions depending on the need. If we're talking about a scenario like you were just sharing, where a company that's in a financial strain, there's a bunch of different programs that your bank can work with, both federal programs, which we know are in constant flux as of the last 2 weeks, but additionally local programs. New York State has a lot of investment made into loan programs that will help support businesses that are at risk, and you want a bank that's willing to work with all of the potential partners, county, city, state, and federal. So that's one of the things. If you have a company that's really in trouble, things that you want to keep in mind. We have a strong partnership with a couple of different partners, including Pursuit, which is here in New York and in Pennsylvania and a couple of other of our markets. They're a lender that's really focused on, if you have a company that's in that challenged state, they have really competitive terms, and they'll take a chunk of the debt, right? They might take 40% of it. So your bank might say, I have a company that comes and says, I need $1 million to do this. And we say, we can't get you $1 million right now. We just can't, because of the risk profile and the ability to cover this debt at the interest rate we have. It wouldn't make sense for you. But we can then bring in Pursuit and say, okay, well, if Pursuit's willing to take $400,000, we can handle the other take the rest.
Yeah. So then it's just really coming up with a solution-based approach, so that it's like, hey, everything's on the table. Let's see what we can pick off the table that will actually solve that problem of growth.
Right.
Solve that problem of getting all the raw materials you may need for that big client.
Right. And as you talk about growth, I think that's why it's important to have a banker who will have a conversation with you. Because if somebody comes to me with a brand new contract, they say, oh, I won this big deal, or hey, my largest client has now tripled their order and I need working capital. That's an entirely different set of solutions we might consider. You could have contract specific financing. You might have a bank who's saying, okay, I understand this is a bigger project by 10 times than anything you've done before. So how do you finance that? Looking at the historicals, it's not going to make sense.
Yeah.
But if I can take a security interest in this specific contract, there we get it done, right? So that's contract specific financing.
What's a security interest?
So that's actually, I wanted to talk about this if we get time.
Yeah.
So taking a security interest basically means that the bank is saying, if you, my company client, doesn't pay me, I can get paid this way.
Oh,
so
okay. So it's almost like a co-signing of some sort.
Right.
Interesting. I've never even heard of that phrase. So that's new to me.
There's a bunch of different ways that you can structure financing, and a good banker is going to be creative with you and look at all the options. In this example, let's imagine we have a company who has, they've been doing business with Walmart for a number of years, and suddenly their product's taking off, it's moving, and the Walmart buyer says, hey, I'm going to 10x my order. In that case, your bank might say, Impressia might say, okay, this is a huge new opportunity for you. We want to support you, and you don't have the cash on hand to buy the inventory to do this, but we know you're good for it. We know you could deliver on this if you just have the capital to do it. And we say, okay, we're going to file a lien on that receivable from Walmart. So that means if something goes awry, then if our borrower can't pay us, we can get paid by Walmart directly.
Because you're kind of co-signed on it.
Yes.
Oh, that's clever too. And then that makes the bank more secure in the lending. And then the person's like, I can just do this.
Right.
And it gives them the
possible.
capital, so they're not stressed and trying to use their credit cards.
Exactly.
And I did that for starting my business. I bootstrapped it from my mortgage.
Right.
And I just went. And I've gotten a lot smarter and has done some business banking since then. So
that's great.
And it has made my life so much more calm and easier when you are working with someone that can really walk you through everything. So going through the bootstrapping, the credit cards, the mortgage, all that kind of stuff, it's a lot easier now.
Yeah.
So there is a pathway to truly continue your dreams as an entrepreneur, which I think is lovely.
Yeah.
So thank you for helping other women.
Of course. I mean, it's not that that's never the right solution, right? Sometimes that's the best option. But can I ask you a question?
Please.
When you were in that early stage and you had to do things like pledge your house in order to get your business started, how did you find the courage to do that? That's what I find most amazing, is so many women who are making that change. And
I would say the support of my husband.
Really?
Yeah, I think it's just if you have a really good teammate, then you can do a lot. So he's like, I have the steady job, I have the healthcare, you go do your dreams. And I was working 80 hours a week. So it was the best for me, and he supported me during that stage. He said, put our house up. That's a big, big risk. And then 2 years into it, he supported us buying the building that we're now in because I didn't want to rent. And we were out of my house for the first 2 years on the first floor. We took over the first floor, employees and all. Yes,
amazing.
so we really truly bootstrapped it, and then we saved up the money, bought the building, and so yeah, he's been a huge support throughout, and I couldn't do it without him. And then my other support is actually my cousin Lauren is my partner. So like having your family support you and enjoying you, and we're opposites, so it's really great. She's more of like the sales marketing side, and more of the accounting IT side. So we really just like meld. So yeah, truly finding people support that can support you is huge.
Oh, that's wonderful.
Yeah.
And that's I'm always interested to hear how women are doing that, because it takes a real leap of faith. And
it was terrifying.
Yeah, I believe it.
Yeah. And I had employees right away. I had 2 employees right away, so I had to figure out payroll right away. And I didn't have time to sit on my hands. So like to the point where I was having an allergic reaction, and I didn't notice for 3 days.
Yeah.
Just didn't notice.
This is like one of the conversations I'm having all the time with customers who are at that stage, and the biggest anxiety for most women business owners is paying their employees.
Oh, yeah.
Right? It's even
all
more
about
top of mind than paying themselves, right? Which I think is so interesting and is a little different than what I remember experiencing with other clients. So, and just being able to have that line of credit to know that, okay, if we're short, I can still pay them.
Especially just with every single business is a cycle.
Right.
So you will have a down cycle, and you can pre-plan for it as much as humanly possible, but then there is that what if.
Right.
And so it's really nice to have either like a line of credit or something else that you could pull on, or someone to call when you need to, like, hey, I think my receivables are a little low for the next quarter. Maybe we need to do something to bolster it up a little bit. But
Exactly.
yeah. So can you please explain to me, because I've asked a million questions about these types of receivable companies, and I've asked them it directly, and I obviously have never committed to it because I just didn't like the terms. I wasn't really comfortable with it. So can you tell me a little bit about the positives and the negatives specifically around that?
Yes. So this is a really growing sector of the non-bank financing company.
What does it mean by non-bank?
So banks are FDIC insured, and they're required to follow federal regulations or state regulations depending on how they're certified. But non-bank financing companies, they often have a bank backing them, but they are not subject to the same requirements, nor do they have FDIC insurance. So a lot of what we call fintech or financial technology companies have, everybody here listening knows that that's growing, right? They're everywhere, and they are advertising like crazy. And some of them are really wonderful solutions. You think of things like a Kick Further or a Kickstarter that like does crowdsourced financing. But then there are others who are less reputable and are more predatory. And in the receivables factoring business, there are very established and up players, but there are many more sort of sketchier players. So it's not to say, I won't take a position that like this is never the right option, but you have to be really careful about who you're dealing with and how they're structuring the terms. So it sounds like you've been through this already.
I have. I talked to 2 companies in the past, and it was more of just fine, I'll hop on the phone. I've never heard of this before. So I was just curious, just general curiosity. And it was more of, it seemed like there was a lot of ways that I, as the consumer, could almost get in trouble if my people didn't pay within a certain amount of time. And then I would get a lot of fees on it. And then it seemed like it would just add up, and I wasn't quite sure how. So can you tell me some of like the downfalls or the pitfalls that have happened to organizations using the factoring?
Yeah, and you're very astute, more astute perhaps than most about the risks here, because you're absolutely right. What happens when a receivables factoring company comes in is they take over as your accounts receivable department. They own your receivables, and they are going to make assumptions about how quickly your customers will pay, how much they will pay based on the invoice amount. And if there's any variation, there are penalties, fees. If one of your customers pays you late or disputes an invoice, that could end up as a default. And then because that's considered a default, the factoring company then bumps your interest rate up to that default rate instead of the rate that they quoted you.
Arguing it back down and having more issues, and then they own your receivables, so then you have to unwind from that.
And it's often not transparent to your customers. So your customers then know that there's an intermediary between you and your financing. And so I've seen it go poorly in a bunch of different ways. The real concern there is that they aren't going to be as good with your customers as you would be as your own employees.
So for example, a quick elbow, hey, do you mind paying? And they're like, oh, sure, I forgot, versus them saying, we will terminate working with you if you don't pay tomorrow.
Right.
And like torturing the client. And you're like, no, they're my friend.
Right, exactly.
I will take the extra day. It's okay.
Right.
So it's less human then, and it's more of kind of an actuarial approach to it.
Precisely. And you just have to think, as with any lending relationship, think about the motivation of the person who's lending you the money.
Mm-hmm.
Where do their incentives come from? If it's a local banker who's also in your community and is working with a bank that's both taking deposits and lending in that same community, your interests are largely aligned. Whereas if you're working with a fintech company that's in another part of the country and has a national portfolio and really is only lending and not taking deposits, their incentives are different, right? Their incentives are to collect as much as they possibly can and to charge as much interest as they can.
Mm-hmm.
And so
origination fees, hidden fees, monthly fees, oh yeah, and they'll just keep hitting, and you really have to keep an eye on your accounting. So that's probably why you do the expense audit too, to really see what fees are coming out, where might there be $1,000 disappearing a month in fees
exactly.
and interest and
Yeah. Yeah.
Which is hugely impactful. So thank you for clarifying that for me. I was always just curious because it always kind of just felt a little weird.
Yeah, well, I'm glad that we had a chance to talk about it because I really am trying to get the word out. I think we've seen it really ran through the trucking industry for a long time.
Oh, wow.
And had an impact. And I have been seeing more and more of my clients who are sort of smaller businesses that are service providers. They're doing things like coaching or even HR, like all kinds
Staffing is probably huge for it, just because if you have temporary staff on there, you're prepaying them, and then you're waiting for receivables, and they sometimes don't come right away.
Exactly.
So, yeah. And it's a recurring every 2 weeks, every week or so, so it is good business for the lender, but not maybe business for the client.
Exactly. And it's not never, like I said, it's not never a solution.
Yes.
But it's one to be careful of, and I think
consider everything, and maybe talk to your local banker.
Exactly. And a lot of local banks will do that for you, and it can look a bunch of different ways. But there are also reputable national banks, names you'd recognize, that do receivables factoring. And I would always say compare to, right?
Yeah, shop around. Yes, don't go for the first one that just seems enticing, because it just might be the email that came in that day.
Right.
That's wonderful. So you've mentioned a lot about the community as well. So what does Impressia do to also get back to our wonderful community in Buffalo?
Oh, I'm glad you asked. So in conjunction with our headquarters openings, Impressia's headquarters is here in Buffalo, but we're actually in New York, Ohio, Pennsylvania, and Virginia.
Oh, wow. That's phenomenal.
So we're doing different things to support the communities in each of our markets, but this is our national headquarters here in Buffalo, and so we feel especially close to this community, and we're lucky to have such a wide selection of nonprofits who are focused on helping the women in our community. So in conjunction with our grand opening, we're actually going to be able to we've done a bunch of sponsorships and donations, but next week we get to write checks to two of our favorite organizations, the Western New York Women's Foundation and the Black Women's Wellness Village.
Do you mind taking a minute to tell us about those?
Sure. So the Western New York Women's Foundation is a long-standing advocacy organization here in Buffalo, and they do work on the national level, lobbying and acting as a voice for women here and in the state of New York. So they're people from Western New York Women's Foundation are in Albany all the time. They're in DC. So, and they also have a bunch of wonderful programs here, workforce development programs. They are, one of their keenest desires is to find childcare solutions to help women be in the workforce. So it's just a phenomenal organization. We're happy to be a supporter of them.
They are wonderful. We work with them, and we absolutely love working with them.
That's great. And then the Black Women's Wellness Village is a new nonprofit. They are still raising funds. There are some really powerful and wonderful women who are founding this organization.
Lovely. And what do they do?
They're focused on, so African American women's health outcomes are not what they should be. I think we're aware that there are a lot of stress-related factors, lifestyle-related factors that lead African American women especially to have a higher level of mortality during pregnancy, during birth, and then lifelong. So it's a really that's not specific to Buffalo. That's a national problem. And the causes are myriad, the solutions are going to have to be myriad. And so one of the solutions is providing access to healthcare that, similar to how Impressia wants to make financing approachable and delivered with women in mind, Black Women's Wellness Village is to try and make healthcare accessible and make it not intimidating, have providers who are keenly focused on that community and have a physical facility that has all of the health providers that they would need.
Wow. That is wonderful. So then really it's focused on, similar to Impressia, really getting in there and being trusted and being able to help improve lives. It's improving women's lives in that way.
Exactly.
I absolutely love that.
Yes. And so we're very proud to support them, and that's going to be a huge benefit to the community. And I encourage everyone watching to look into both organizations and see if there are ways they want to help.
That's wonderful. Now, is there anything else that you wanted to tell us about Impressia Bank?
Mainly that we have our big headquarters grand opening in February, this coming month. So come in, talk to us. We're here in the Electric Tower. We've got a beautiful facility. We've got coffee hot for anyone who wants to come in and talk. So if you have questions about financing, if you have concerns about just your own personal banking, wealth advisory, anything like that, come talk to us, and we'd love to see what we can do to help.
And my advice in general is go talk to someone very, very trustworthy. Talk to Lauren and Impressia and really talk and have those vulnerable conversations. Because if you don't have them, then you may never do that big company or that project that you wanted to do.
Yes.
Well, thank you again for being part of the Pain Point podcast, and come visit.
Thank you.
This was just so much fun. Great job. High five.
Thank you.
Thanks for tuning in to today's episode of the Pain Points podcast. If you enjoyed what you heard, be sure to follow us so you never miss out on future episodes.